kind of benefits do you get when you increase spending or when you decrease taxes, right? So we can all sit around in academic departments and discuss this, but it doesn't really seem to be a part of the academic, of the political conversation. But more to your question, I don't see anything that's actually going to point out the scoring effect, right? The ultimate future dynamic effect of these changes in trade policy.
Now, just following up on Brendan's point here, so, the dynamic scoring is important, and certainly if you cut taxes and people have more disposable income, they spend more, it's an economic stimulus, and it works all along the Laffer curve until you get to a point where the benefit basically fades out. But the point here is, if we're talking about a massive bump up in military spending and also these other social programs he's pointing for, you can't get the money to pay for that just through these dynamic adjustments unless you use some really inappropriate assumptions. So you want a big expansion of government, you need a big expansion in tax revenue.
All right, guys, thanks so much. Brendan Greeley from Bloomberg and Carl Riccadena as well from Bloomberg Intelligence. Don't miss Donald Trump speaking at the Economic Club in New York. We will be covering it live here on Bloomberg Television, 11:30 a.m. Eastern. That's not all, guys. Coming today at 12:30 Eastern, we have an interview with Massachusetts Senator Elizabeth Warren, and later, Blackstone Group CEO Steve Schwarzman will join Bloomberg TV at 4 p.m. Going to be big.
Yeah, some big conversations coming up. That does it for Bloomberg Go. Then from myself, Jonathan Ferro, Alex Steele, and David Weston. In the markets, 26 minutes in. Stocks marginally positive in the United States, negative in Europe for a sixth straight day, and a bond curve that continues to steepen. This is Bloomberg.
It is 10 a.m. in New York, 3 p.m. in London, and 10 p.m. in Hong Kong. From New York, I'm Julie Hyman, in for Ronnie Quinn.
And live from London, I'm Mark Barton. Welcome to Bloomberg Markets.
next hour. Here's what we're watching. Bank of England policymakers indicate there is still a chance of another rate cut this year. We'll cover the potential longer-term fallout from Britain's decision to leave the European Union.
On the anniversary of the Lehman Brothers bankruptcy, we look at where we are 8 years post-financial crisis, how one senator is pushing to jail more bankers, while Wall Street is dipping back into risky crisis-era securities.
And Golfsmith becomes the next victim in the sport as popularity continues to fade. The company announcing plans to file for bankruptcy today. Is this sport forever stuck in the rough? Well, it's about 30 minutes into the trading day here in the U.S. Let's head to the markets desk. Bloomberg's Oliver Rennick is there. Oliver, another day of seeming calm, at least on a relative basis.
Yeah, on the surface, things are calm. Who knows what we might be in store for the next week or so. But indeed, if you look at what's going on with your major averages, a little bit of green and ultimately not much. Futures were doing a little bit better before we opened the market here, but nevertheless, those gains have pared back since we got some economic numbers that were sort of lukewarm. We basically had jobless claims pretty much in line, and then retail sales a little bit weaker than expected, so not really adding a whole lot. The question is whether or not these markets aren't moving because those economic numbers today signal that the Fed is not going to be going next week, or because investors don't like the idea of weaker economic data. It's kind of hard to suss that out at the moment, but nevertheless, here you're basically flat. A little bit of better gains in the NASDAQ. We've seen some of those tech companies hold up just a little bit better. But moving at some of the bigger movers today, the one that we got to talk about is Apple, of course. It's continued to do pretty well. You're basically looking at a big jump in the stock of the past 4 days, up another 260 basis points today. Pretty big move there, added about 60 billion in market cap across those gains we've had recently. And then you've also got Goodyear doing pretty well. That's basically a story that a lot of the stock market has been about recently, which is higher payouts for investors. Then we're actually looking at also Wells Fargo on the downside. We know that that company has been doing very poorly. We're now looking at basically 5 days in the red for Wells Fargo. If we can move the board, basically looking at what's been happening since, of course, investors are reacting to some of the news that that bank, of course, has a bit of a scandal on its hands. Then you're looking at the dollar. We look at some of the reaction for the U.S. dollar after some of that economic data came out. Of course, here's where we had the 8:30 move in terms of some of the economic numbers coming out, retail sales, jobs claims. A little bit of a jump since then, and then if we switch it over looking at the U.S. 10-year, this is actually pretty interesting because there's a little bit of a jump here. If you look at, there you go, Treasuries 10-year, you can see we're up a little bit. But what's interesting here, we just flashed over the UK bond. I think what might be happening today is a little bit more of a reaction to what's happening overseas, because the numbers here were pretty lukewarm. But if you actually look at the UK numbers, they beat very well in terms of their retail sales and their economic data. Yields shot up there, and perhaps that's kind of what's happening. Here's the move that's very clear across the pond in the UK. So that's obviously having an effect on markets today. Ultimately, at the end of the day, though, we think about this in terms of what's happening for the Fed and your rate hike expectations for December at about 53%. Largely flat. This number hasn't really moved a whole lot. So we're continuing to think about what all this means for the Fed next week, Julie.
Thanks so much, Oliver. Appreciate it. And Mark, what's going on over there in the UK in the wake of the Bank of England's comments and not doing anything on rates?
Yeah, sitting on its hands, Julie. 90 minutes left of the Thursday trading session in Europe. The stage is set for a rate cut later this year. If the data pans out as the Bank of England forecast in August, that was the big takeaway today. No change in rates, the QE program, the corporate bond buying program as well. But the BOE did accept the data in the short term has improved, and the second half won't be as bad as it initially anticipated. What is significant today is that the stock 600 is down for a 6th consecutive day. That is the worst losing stretch since February earlier this year. The 6-day drop is 3.5%. That's the biggest drop since July over 6 days. This is one of the big decliners today. Next, clothing retailer. Biggest drop since just after the referendum. The number 2 clothing retailer here in the UK warned the current quarter will be its toughest this year. It said sales next year will be hurt by Brexit-induced price increases. Look at the shares, down by 4.8% today. The flip side of the coin is one of the big grocers here in the UK, William Morrison Supermarkets, look at that share rise. 7.4% higher today, biggest increase since October 2014. It reported estimate-beating results today. It said saving and cash flow targets will be exceeded as it starts a revival under the new Chief Executive Officer Dave Potts, who said the retailer is still in the foothills of its recovery plan about 18 months after the former Tesco executives was hired to fix this business that was ravaged by a loss of customers to those discounters Aldi and Lidl. What a turnaround in its share price today. Want to talk about the big piece of data we had in the UK today, beside of course the Bank of England. This was the macro event of the day. Retail sales, yes it declined, yes it was a decline, but it was less than economists forecast in August, following the strongest July in 14 years. Retail sales fell by 0.2% versus a decline of 0.4% estimated by economists. And the data, Julie, continuing to show resilience here in the UK, something that was acknowledged today by the Bank of England.
Even as those retail sales here in the U.S. were weaker than estimated. Thanks, Mark. Let's check in now on the Bloomberg First Word News. Elisa Parenti has more from our newsroom.
Thank you, Julie. The ceasefire appears to be holding in Syria. The problem now is getting food, medicine, and other supplies to rebel-held areas in the city of Aleppo. An activist group says government troops and rebel forces are preparing to withdraw from one of the main roads leading into the city. Russian troops would then take over, keeping it open for aid convoys. Prosecutors in Brazil have accused former President Luiz Inácio Lula da Silva of masterminding the biggest corruption scandal in that country's history. They charge that Lula received more than $1 million in benefits from the so-called car wash scheme that cost the country billions of dollars. Lula denies the allegations and says prosecutors have no proof. In the Philippines, more details are coming out about President Rodrigo Duterte's war on drugs. Police say since July 1st, they have killed 1,100 people. Another 2,300 were killed in cases that are still being investigated, and more than 700,000 people have surrendered. A wing flap that washed ashore an island off Tanzania has been identified as being a part from Malaysia's Airlines Flight 370. The flap was found in June, and analysis now confirms the part is from that missing aircraft. The aircraft vanished with 239 people on board during a flight from Kuala Lumpur to Beijing in March 2014. China has issued the highest storm warning now as a typhoon makes landfall. Heavy rains from Typhoon Meranti battered the city of Xiamen. The storm was expected to weaken as it moved inland. Earlier, the typhoon left 2 dead and 38 more injured in Taiwan. More than 1 million households lost electricity. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. Mark, back to you.
Elisa, thank you very much indeed. Let's turn now to an exclusive interview. Leader of the UK Labour Party, Jeremy Corbyn, delivering a speech on the economy just moments ago at our very London headquarters right here. Afterwards, Anna Edwards spoke to him and asked him what he thinks is reasonable when it comes to a timetable for triggering Article 50.
I would have thought the government will probably set out a clearer position now, I hope, in this autumn, and have those talks with the European Union and other governments. We're doing the same with governments and opposition across Europe, and indeed Emily Thornberry is going to Norway next week to look at their model.
You've talked today about wanting Parliament to be fully informed, no backroom deals. Can you see a situation where you would vote against the triggering of Article 50 if you felt that Parliament didn't know enough about what you were stepping into?
We would reserve our position. We would reserve our right to oppose. Not that we don't respect the result of the referendum. Obviously we do, but I want to set out those lines that we maintain crucially market access and rights, and which I didn't say the first part was membership of the European Investment Bank. We think that is important. These things are all actually quite possible. Hence we're looking very closely at the Norwegian model as well as talks with other countries, because there are many who want to have a relation with the European Union who maybe are not members but still want to develop it. So there is a big possibility.
Theresa May says there won't be a off-the-shelf solution. It'll be something bespoke, but you're talking about
largely based on oil, and it is a much smaller society than ours, but nevertheless they have a very strong social democratic tradition. They have a huge and very effective welfare state and health service. So the model of their socially based economy is not that different from what we in the Labour Party talk about.
What do you want to do with regards to freedom of movement? Because if that is the price for a soft Brexit, would you be able to give any ground on freedom of movement, allow more freedom of movement that perhaps some who voted for Brexit would have wanted?
Well, at the moment there is freedom of movement, of course, not for people outside the European Union, but people within the European Union. My concern was never so much as the right of people to move as the exploitation that often went with it. Sport Director Shirebrook is an example where you've got low-paid Eastern European people, in some cases even denied the living wage or minimum wage there, and therefore I made a big feature in the referendum campaign of the Posting Workers Directive amendments, which would stop this undercutting. Undercutting is the real issue, and harmonising economies on the east and west of Europe is more important.
On the subject of freedom of movement, though, do you think that still has a place within Britain's relationship with the rest of the EU?
Yes, because I think that British people will also want to have the right to travel to Europe, and they won't want to get to something like an EXA as you have with the United States, or paying a visa in order to go to the European Union, to go to Paris or Brussels, for example. But also there are 2 million British people who made their homes in other parts of Europe, mainly Spain and France, but other parts of Europe as well. And one wouldn't want a sort of tit for tat between governments and saying, so if the British government says, well, we're going to stop freedom of movement of Polish workers or others, and Spain says, okay, well, British people who live in Spain can up sticks and go. We don't want that, because surely in one continent people can learn to live together. It's a question of having a degree of economic and social harmony between countries that's very important.
Talking about the economy, you've talked today a lot about the need for infrastructure investments. How would you see that being paid for? You talked in the past about people's QE. Quantitative easing is back on the agenda at the moment because of measures the Bank of England has taken to stimulate the economy. Do you see a Bank of England role in funding infrastructure investment?
QE is back on the agenda. The government put in 385 billion at the height of the banking crisis. They put in another 60 billion recently. The Japanese government has used QE several times in order to stimulate its own economy. What we would envisage is a 250 billion government investment, and the rest borrowed if necessary at the very low interest rates that are there. The point is to set up a well-funded investment bank that can give us the infrastructure we need. Look at the parlous state of the railways, look at the parlous state of broadband in parts of the country, particularly the rail infrastructure in the northeast, northwest is absolutely crucial and needs upgrading. Ditto Scotland, north of the Central Belt.
We might hear more about that in the autumn statement from the Chancellor, of course. We also might hear more about taxation. Which areas would you want to see higher taxation in the UK?
I want to see corporate taxation levels that are roughly equivalent to the rest of the OECD countries. We seem to be going, on a downward spiral on that. I don't think that's a good way to go forward. I don't want us to become an economy that's offshore of Europe and trying to attract investment in on the basis of low taxation. I want it to be investment that comes in on the basis of the attraction of a high-skilled, highly motivated workforce, and also maintaining the 50 pence rate of a top level of income tax to me is very important.
You've talked today about some of the changes you want to see in business and the investment you want to see, including in broadband. You dismissed the notion of renationalising any part of the infrastructure around broadband. What divides then for you parts of the UK economy that should be renationalised and parts that shouldn't?
What I've said is that the train operating companies should certainly be publicly owned. It's a monopoly, a natural monopoly, and we paid for it ourselves. On the case of the broadband infrastructure and telephone infrastructure, it is a requirement on BT as a former publicly owned company to maintain that social infrastructure. I want to ensure they maintain that social model that they have. If they in turn then come to the government and say you've got to take a stake in us, that would be an interesting development, but that hasn't happened. I think there is a public thirst for saying there has to be a primary provider of a universal broadband service, and it's in the privatisation arrangements of BT to do that.
New
UK Labour Party leader Jeremy Corbyn earlier today on Bloomberg Television. Julie.
Well, coming up, Mark, the bond market is showing signals that traders have not seen since 2012. We'll dig deeper into that story next. This is Bloomberg.